Well, Target's disappointing earnings report this morning saw sales fall 3% year over year. This is yet another example of consumers pulling back on certain discretionary items. Target's report comes after Walmart said shoppers were trading into their stores, and Macy's reported that consumers are being more discerning in spending. For more on the pulse of the consumer, we have Jerry Storch. He is Storch Advisors CEO and former Toys R Us CEO. Jerry, thanks so much for being here with us. Obviously, you have incredible experience to bring us about what it's like to lead a retailer during difficult economic times. So I'm curious, from your perspective, does this earnings season indicate to you a potential downturn that we are about to see in the broader retail space?
I think the consumer has been snowing for some time. To some degree, this has been disguised, oddly enough, by inflation. So the government reports, for example, the sales report that just came out recently, said that sales during the month of April grew by 3.5%, 3.7%, something like that. 2.7, you look at just retail. But they don't factor out inflation. Inflation is more than the growth in retail sales. So essentially what's happening is the consumer is spending more and getting less, and they know it. So that's what's been going on. And then in an environment like that, where does the consumer spend? Well, they spend where they have to spend first. So on necessities, on food, on the core health and beauty care types of products. And so that's what's been happening. So discretionary sales are simply not happening. And Target, being a retailer who's made its name on those kind of nice to have fun products like apparel, cool apparel, electronics, home goods that are kind of fancy, kind of fun, chic, shabby, whatever. But Target's made its name in those discretionary categories. And that's not where the consumer's buying right now. Meanwhile, where they are buying, which is in these necessities I talked about, Target has just simply doesn't have a strong value perception compared to Walmart or Costco or others. And consumers saying, hey, I'm not going to pay too much for it at Target. I'm going to go to Walmart.
So, Jerry, then where does that leave this turnaround story when it comes to the fact that people simply are not going to Target, they're not spending those discretionary items? We have inflation, which remains elevated, but has improved just a bit. How long is it going to take them for this turnaround story to play out?
Well, they're doing a lot of things well, and you saw just earlier this week that they knew this, obviously, that things were tough in this area. That's why just this week they announced they're taking down prices on 5,000 items. And so they're clearly trying to project value. The problem is they aren't really set up to do it. And so, for example, Target, years ago, about 20 years ago, made a strategic blunder to basically pull out of the full-service grocery business. What you have in Target right now is really a large convenience grocery store, whereas Walmart is the nation's largest real grocery store with all the departments and fresh produce and everything else that you want. And that positions Target very poorly. They can't fix that overnight. They can't suddenly sort of snap their fingers across all of these stores and have a real grocery store inside of them. And so it's kind of a backwards hypermart at Target right now, where what you have is, principle of hypermart is you go to the grocery part every week, and then you pick up some general merchandise at higher margin while you're there. Target's kind of backwards. It's you go buy general merchandise once a month, and while you're there, you pick up some low margin grocery. This is a fundamental strategic blunder that Target made about 20 years ago and puts them in very bad shape compared to Walmart. But there's a lot they can do, and they're starting to do more of that, like emphasize price more, so on and so forth. But I also have to point out, they've done this themselves on price integrity. So they've got a loyalty program that's very expensive, and so they have to raise the everyday prices in order to pay for the loyalty program. Their ads are frequently full nowadays with BOGOs, as we call them in the business. Buy one, get a sale on something else. Buy one, get a gift card discount, like on laundry products, detergent products, things like that. So this undermines price integrity. So Target's been working for some time against actually hurting their price perception. They aren't going to fix it overnight.
So, Jerry, is it too late then for Target when you take into account the moves that they're rolling out Target 360, they're cutting prices on up to 5,000 products? Is that going to move the needle, or is it too little too late here of an effort?
Well, I think it'll move the needle. They're coming from a big hole. I mean, they still are not matching their pre-pandemic performance when you look at operating margins. And so that's kind of disconcerting. When you think about Walmart, flew past those numbers a long time ago, has been just blasting off during the same period that Target is struggling. And so long ago, we can stop blaming Target's issues on supply chain difficulties from the pandemic. Remember when we all said that, oh, it's all the same. It was never all the same. Even when both Target and Walmart were struggling, Walmart was doing much better than Target. And so now as we come out of this, Target's got to look towards the future and ask those fundamental questions. Where are we really going to stand on price? Because it's not going to work just to say, well, we're more expensive than Walmart is, and in some cases quite a bit more expensive, by the way. And you've got Aldi and people like that underpricing even more, even lower than Walmart prices. So where are we going to be on price? I don't think they've answered that overall. They're just taking sort of tactical moves to try to impact it. But they're a huge retailer. They have a great deal amount of consumer brand equity. People still love shopping there, so I think they have a lot to work with. So I'm not counting them out, but it's going to take a while. I would say they did sort of say that their guidance said sales for this current quarter, the second quarter, will be between 0 and 2% positive same-store sales. If they're able to do that, that'll be the first time Target's had positive same-store sales in a very long time. As you know, they were negative 3% plus in this quarter when Walmart was positive 3%. So the quarter's already halfway over. So they know where they're going to come out, or at least part of it, and they're saying, oh, we might be flat now or up a little bit in this quarter. That would be significant improvement in trend. So I'm hoping that's what we're going to see.
All right, Jerry Storch, we have to leave it there. Storch Advisor CEO, former Toys R Us CEO. Thank you so much for joining us here and for weighing in on Target's results. Again, Target off just around nearly 7% here in early trading.